You've decided to invest in the UAE, but now comes the billion-dollar question. Dubai or Abu Dhabi? Everyone knows about the glittering skyline of Dubai, but not many consider its powerful sibling. For instance, what if I told you that on a 2 million dirham property, your entry fees in one city could be 4 times higher than in the other? Today, we're cutting through the noise to see which emirate offers the smarter financial future for your capital. I'm Hira Nazir, a Dubai-based realtor, here to give you the best realty experience. And in this video, I'll help you decide which is the better investment for the two. After hearing about those entry fees, you're probably thinking, okay, that's a big difference, but where are the actual returns? And where is the market really performing better? See, this is where most investors get stuck. They see flashy headlines about 20% price growth in one city, but they completely miss the quieter, more fundamental numbers that actually determine their long-term profit. So in this section, we are going to look past the headlines and dive deep into the raw data. We'll see how a market with explosive growth might not always give you the best monthly income, and how a more stable market could be a hidden gold mine for rental returns. Because choosing where to invest isn't just about picking a winner, it's about making sure your strategy doesn't fail because you were following the wrong numbers. We'll break this down into 3 crucial areas: price, growth, rental yields, and overall market activity. First, let's talk about property prices. In 2024, Dubai's market was on fire, with an average sales price increase of a massive 20%, hitting on average of nearly 1,600 dirhams per square foot. Now, while that growth is cooling slightly, the prime luxury market is still expected to grow by another 8 to 12% this year. Now look at Abu Dhabi. In 2024, its apartment prices grew by 11.4% and villas by 12.6%. But here's the key: the market is accelerating. In the second quarter of this year, villa prices jumped another 2.6% in just 3 months. So while Dubai had a huge head start, you can see Abu Dhabi is now picking up speed and closing that growth gap. Next, and this is critical for any long-term investor, let's talk about rental yields, the actual income your property generates each year. In Dubai, apartments are delivering a strong gross rental yield of about 7.3%. Villas are a bit lower at around 5%. But check this out. In Abu Dhabi, the average rental yield for apartments is between 6.5 and 7.5%. For villas, it's between 5 and 6%. This is where it gets really interesting. Despite Dubai's higher property prices and global fame, the rental returns you can get in Abu Dhabi are almost identical, and in some cases even better. This tells us that Abu Dhabi's property values are very closely tied to the actual income they can generate for you. Finally, let's look at market activity, or what I call the market's heartbeat. In the first 3 months of 2025 alone, Dubai's market saw over 42,000 sales transactions worth a jaw-dropping 114 billion dirhams. Now compare that to Abu Dhabi, which recorded around 1,300 transactions worth 3.7 billion dirhams in the same period. The difference is huge, and it tells a story. Dubai's market is a superhighway. With that incredible volume, it offers amazing liquidity, meaning it's much easier to sell your property and exit your investment quickly. Abu Dhabi's market is more like a carefully planned city road. It's not as fast, but it's incredibly steady, and the value of ready-to-move-in properties is surging. Let's put all those numbers side by side. As you can see here in Dubai's price growth and transaction volume, they're all in a league of their own. It is a bigger, faster, more liquid market, no questions. But look closely at those rental yields. Abu Dhabi is right there with Dubai, offering incredibly competitive, stable returns for your money. That is the critical takeaway from this part. If you are an investor chasing rapid capital growth and need the flexibility to sell your asset quickly, then the high speed and volume of the Dubai market is perfectly built for that strategy. But if your goal is to build a portfolio that generates strong, predictable rental income from day one, Abu Dhabi's equally impressive yields combined with its steady accelerating growth make it an incredibly compelling alternative. So we've looked at the numbers on price and rent, but you might be asking, are these numbers sustainable? What if a flood of new properties hits the market and my rental income drops? Well, that's a brilliant question, because the underlying engine of a market, its supply, its demand, and the psychology of its buyers is what separates a safe long-term investment from a risky gamble. So now we're going to pull back the curtain and look at the powerful forces driving the numbers we just saw. We'll discover why one city is building homes at a record pace while the other can't build them fast enough. And we'll see why investors in one emirate are buying properties that don't even exist yet, while buyers in the other are focused on keys they can hold in their hand today. Understanding these dynamics is crucial because it will tell you whether your investment is built on solid ground or on a shifting sand. Let's start with the biggest factor: supply versus demand. Dubai is set to welcome 73,000 new homes this year, with projections of 300,000 more by 2028. This wave of supply is largely in response to a population that's surging over 4 million, fueling demand across the city. On the other hand, Abu Dhabi's pipeline is more measured. Around 11,900 units are scheduled for delivery this year, with only about 11,900 units scheduled for the rest of this year. There simply aren't enough new properties to meet the growing interest from buyers. With demand consistently strong, this pace of new supply has helped sustain upward momentum in both sales and rental markets. In short, Dubai's approach focuses on large-scale expansion to accommodate future growth, while Abu Dhabi's strategy leans toward a more controlled rollout that enhances market stability. Next, let's look at the psychology of the market: off-plan versus ready properties. In Dubai, the off-plan segment remains dominant. In Q1 2025, off-plan accounted for around 56% of all transactions, translating to approximately 25,440 deals worth 55.2 billion dirhams. This reflects strong investor confidence and appealing payment plans that let buyers bet on tomorrow's value. In Abu Dhabi, the picture is more subtle. While buyers continue to favor ready completed homes, with ready sales rising in volume and value, off-plan remains an active and evolving part of the landscape. Several notable off-plan projects have launched recently. Aldar introduced Mamsha Gardens on Saadiyat Island, which consists of 72 apartments and townhouses. Imkan unveiled Nasim Al Jurf in Ghantout, which features 111 villas, 8 towers, and 60 townhouses. And Tariff, in partnership with Marriott, launched W Residences on Al Maria Island. So essentially, Dubai's off-plan market is expansive and investor-led, while Abu Dhabi's off-plan market is more measured but anchored in high-quality developments. This isn't a clash, it's two strategies playing to different strengths. Both cities offer compelling off-plan prospects today, just at different scales. Now let's consider what type of properties are really delivering capital growth. While apartments remain popular, making up 76% of sales in Dubai and delivering 7.3% rental yields, they're just part of the picture. Villas and townhouses, though fewer in number, are delivering exceptional appreciation. In Dubai, villa and townhouses prices have surged 92% over the past 3 years, with 35% growth in the last 12 months alone. The 2025 residential market overview, supported by the Dubai Land Department, reported price increase in 19 out of 20 tracked villa communities. Across in Abu Dhabi, villas are showing similarly strong momentum. Since Q1 2020, villa values have risen 42.3% and more than 33,000 homes are currently under construction and scheduled for delivery by 2029. In hotspots like Saadiyat Island or Khalifa City, some communities are seeing annual villa appreciation approaching 30%. So the lesson is clear. While apartments may be the volume workhorses, villas and townhouses are the capital growth engines in both markets, especially in off-plan and premium segments. Finally, let's touch on the potential for short-term rental. Dubai, with its 18.7 million overnight visitors last year, has a mature, highly profitable short-term rental market. In fact, prices are forecast to rise another 18% this year alone. It's a proven champion. Abu Dhabi's market is growing steadily, powered by attractions on Yas Island and the cultural district on Saadiyat Island. But in the very near future, Abu Dhabi is about to get its very own Disney theme park. This will surely supercharge tourism and rental demand in the years to come. Dubai is the powerhouse today, but Abu Dhabi is the rising star with a massive world-class catalyst coming soon. So what does this all mean for your decision? Dubai's large-scale development and ambitious off-plan market make it an exciting choice for those looking to capture future growth and scale. Abu Dhabi, on the other hand, with its measured approach to new supply and strong end-user demand, provides a market that's steadily appreciating and rewarding current owners. Either way, you'll be buying into a market with incredibly solid fundamentals. Remember in the beginning, I said that your entry fees on the exact same 2 million dirham property could be 4 times higher in one city? You're probably wondering, how is that even possible and what other hidden costs should I know about? That's a critical question which I'll be answering in this section. We are going to lay out every single cost side by side so you can see the real bottom line. We'll compare the upfront government fees, the year-over-year running costs, and even how the numbers stack up when you decide to sell. Knowing these costs isn't just about saving money, it's about understanding your true return on investment and ensuring the profit you think you're making is the profit you actually keep. First, let's break down those transaction and registration fees. In Dubai, when you buy a property, you pay a Dubai Land Department transfer fee of 4% of the purchase price. By convention, the buyer pays all of it. On top of that, there are registration fees of around 4,000 dirhams. Now in Abu Dhabi, the property registration fee is only 2%. And crucially, the law says this fee is split equally between the buyer and the seller. This means your effective non-negotiable share as a buyer is just 1%. So on that 2 million dirham property, your fee in Dubai is 80,000 dirhams. In Abu Dhabi, it's just 20,000 dirhams. That's a 60,000 dirham difference from day one. Next up, we have annual service charges, the fees covering maintenance of buildings and communities. In Dubai, service charges are generally in the ballpark of 10 dirhams to 30 dirhams per square foot, depending on the type of property and amenities involved. For most standard apartments, expect rates at around 10 to 18 dirhams per square foot. Luxury developments may go higher, while villas often fall in the 3 to 8 dirhams per square foot range. In Abu Dhabi, typical service charges are somewhat in line, often ranging from 10 to 25 dirhams per square foot depending on property type and the level of shared facilities. An important differentiator is that Abu Dhabi's government has been actively managing these charges. In 2023, the Abu Dhabi Real Estate Centre reported a 6% reduction in service and community charges, saving owners and investors a total of approximately 39.7 million dirhams compared to the previous year. This is part of a multi-year effort that included 18.1% cuts in 2020 and 8.3% in 2021. All this is great, but what about financing? Well, getting a mortgage as a non-resident is possible in both cities. though you'll typically need a down payment of around 35 to 40%. But again, the fees are lower in the capital. The mortgage registration fee in Abu Dhabi is just 0.1% of the loan, while in Dubai it's 0.25%. It's another small but significant saving. Finally, let's talk about your exit strategy and potential profits. Dubai's market is known for high-speed growth. Its incredible liquidity makes it easier to sell quickly, which is perfect for investors looking to flip a property and realize gains in the short to medium term. Abu Dhabi's growth is more measured and steady, driven by the fundamental of its economy. The exit strategy here is typically longer term, focusing on years of rental income, followed by gradual price growth. But because the entry and exit costs are so much lower, your net gain is far more efficient. Let me put it all together for you. On a hypothetical 3 million dirham apartment, your initial saving on the transfer fee in Abu Dhabi is 90,000 dirhams. Over 5 years, with more stable service charges, you could save another 50,000 dirhams or more. That means the Dubai market would need to make over 140,000 dirhams more in profit just for you to break even. Let's look at this table because it makes the difference crystal clear. For the same 2 million dirham property, your total upfront government fees as a buyer in Dubai are over 84,000 dirhams. In Abu Dhabi, they're just 20,000 dirhams. When you factor in the lower mortgage fees and the government-regulated service charges, the long-term financial picture is undeniable. While Dubai may offer the potential for higher gross returns on paper, Abu Dhabi's entire cost structure is designed to give you a superior net return. It's a market built for smart investors who know it's not about how much you make, but about how much you keep. Okay, the numbers are making sense and the costs are clear, but now you're wondering about the legal framework in both cities. We're going to cover this section quickly because the regulations and ownership details aren't that different. It's already clear that both Dubai and Abu Dhabi welcome foreign investors with open arms. In designated freehold zones, you can own property 100% in your own name, giving you and your family full control and ownership. The biggest incentive that applies to both is the UAE Golden Visa. A real estate investment of at least 2 million dirhams in either city qualifies you for a 10-year renewable residency visa. This is a game-changing benefit that offers incredible long-term stability. Now for the key difference in strategy. Dubai's market is regulated by its Real Estate Regulatory Agency, or also known as RERA. It pioneered many of the region's rules, like the mandatory use of secure escrow accounts to protect buyers of off-plan properties. But Abu Dhabi is making a powerful move to be seen as one of the most transparent and secure markets in the world. According to JLL's 2024 Global Real Estate Transparency Index, Dubai ranked 3rd, while Abu Dhabi ranked 5th. They are implementing strong financial crime prevention regulations and are deliberately using good governance to attract serious long-term investors. So the takeaway is simple. Both markets are secure and well-regulated. But if you are an investor who places the highest possible value on world-class transparency and predictable governance, Abu Dhabi is strategically positioning itself to be your safe haven. Now let's look at future projects and people. We've covered the performance, the dynamics, the costs, and the rules. But the biggest question an investor like you can ask is whether all this is future-proof. Because buying property based only on today's market is like driving while looking in the rearview mirror. You have to know what's coming down the road to make a truly smart decision. In this final chapter, we're going to look into the future and explore the multi-decade master plans and the jaw-dropping mega projects that will define these cities for a generation. We'll see how one city is future-proofing its lifestyle while the other is future-proofing its entire economy. Understanding this vision is the final piece of the puzzle. It's what separates a good investment from a truly great one. First, the grand vision we have, Dubai's 2040 Urban Master Plan, which is all about quality of life. The goal is to make it the world's best city to live in by doubling green and recreational spaces, reserving 60% of Dubai's land for nature and rural spaces, and increasing public beaches by 400%. Also, they plan to boost hotel tourism land use by 134%, expand commercial activity zones to 168 square kilometers, increase land for education and healthcare by 25%, and most importantly, deliver 55% of residents within 800 meters of a public transport station. This isn't just about making the city prettier. While Dubai's 2040 urban master plan sets the vision, the real momentum comes from flagship projects already reshaping the city. Take Expo City Dubai, a 3 million square meter urban community evolving from Expo 2020 with over 200,000 square meters of residential and commercial space, plus cultural and educational hubs that ensure the site continues to thrive as a living legacy. Then there's the Al Maktoum International Airport in Dubai's south. 128 billion dirhams worth of development spanning 145 square kilometers, projected to generate up to 500,000 jobs and transform into a full-scale airport city designed for over 1 million residents. And complementing this is the Ittihad Rail project, expected to contribute 145 billion dirhams to the UAE's GDP over time, with a 15.5% economic return rate and over 9,000 jobs created by 2030. Meanwhile, Abu Dhabi's Economic Vision 2030 has a different but equally powerful goal. They plan to increase non-oil revenue share from 40 to 70%, and they are well on track to achieve this ambitious goal. In 2023, there was sustained non-oil growth across sectors like construction, which grew by 13.1%, the financial and insurance sector, which grew by 25.5%, wholesale and retail trade, which grew up to 7.9%, and transport and storage, which increased by 17.1%. The Khalifa Industrial Zone, Abu Dhabi, is expected to contribute up to 15% of the Emirates' non-oil GDP by 2030. Also in early 2025, the Abu Dhabi global market saw a 41% surge in registered money managers, attracting global asset managers like BlackRock, PGIM, and Braven Howard. And these aren't just plans on paper, they are coming to life through some of the most ambitious projects on the planet. In Dubai, Palm Jebel Ali has made a strong return. Relaunched in 2023, the project is now slated to be twice the size of Palm Jumeirah, adding around 110 kilometers of coastline and housing for 35,000 families. The response to this launch was extraordinary, with the first fronts reportedly sold out immediately. Along this, you have the Oasis by Emaar, a $20 billion luxury community where 25% of the land is dedicated to lakes, canals, and parks. Across the water in Abu Dhabi, momentum is building across new frontiers. Aldar's Fahd Island just launched and delivered over 3.5 billion dirhams in sales in its first week. Additionally, Aldar's debut on Al Fahd Island represents a major expansion of their portfolio. This coastal wellness project spans 2.7 million square meters and carries a total development value of over 40 billion dirhams. Elsewhere, new developments like Mandarin Oriental Gardens and other Aldar-led destinations on Saadiyat and Yas, such as Mamsha Gardens, Mandarin Oriental Residences, and various branded luxury projects continue to reinforce Abu Dhabi's growing appeal among global investors. So after everything we've covered, which is the better investment? The answer depends entirely on your strategy. If you are an investor seeking rapid capital appreciation in a fast-paced market, then the evidence is overwhelming. Dubai is your clear choice. You should be looking at off-plan projects in new mega communities to maximize gains from the market's powerful momentum. However, if you are an investor focused on wealth preservation, predictable costs, and strong rental yields backed by solid fundamentals, then Abu Dhabi presents a superior risk-adjusted proposition. Your strategy should be to acquire both ready and off-plan properties in emerging hotspots like Yas or Saadiyat Island for long-term reliable income. In the end, the choice isn't between a good market and a bad one, but between two brilliant yet different pathways to wealth. I'm Hira Nazir and I thank you for watching. Take care.